The market does not owe you a single cent. The moment you begin to believe that it does, that you are entitled to get back what you just lost, you have already sealed your fate. You have ceased to be a speculator and have become a common gambler, animated by the basest of emotions, revenge. This is not a game of retribution. It is a game of cold, dispassionate calculation. The market is not a person. It has no memory of taking your money and no intention of giving it back. When you trade with anger, you are fighting a ghost, and the only one who will suffer from your blows is your own account. Every lesson I ever learned about this business was paid for in full, with my own cash. Every ruin, every comeback, every principle of speculation that I hold to be true is chronicled in the book Reminiscences of a Stock Operator. If you wish to understand the timeless battle against the market and, more importantly, against yourself, the link in the description of this video is your first step. But be warned, reading it is not enough. You must absorb its warnings until they become part of your very being, for the market is a relentless teacher, and the tuition is your entire stake. I learned the price of revenge early. After years of success in the bucket shops, establishments that were essentially unregulated brokers who profited when their clients lost, I came to New York with a considerable fortune for a young man. I thought I knew the game. In those shops I had mastered the art of reading the tape. The ticker, which in your modern world is the real-time price feed streaming across your screen, was my Bible. I could feel the market's next move just by observing the rhythm and flow of the quotations. But in New York, trading with a legitimate broker, I encountered a new problem: the speed of execution. My entire system was built on getting in and out at the precise price I saw on the tape. Now my orders were filled seconds, sometimes a minute later. The edge I had was gone. My first major operation was in Union Pacific. I saw the familiar signals on the tape that told me it was ready for a sharp rise. I bought a substantial line of stock. But instead of rising, it hesitated and then began to fall. The tape was telling me I was wrong, and my own rules dictated that I should take the small loss and get out immediately. But I did not. Why? Because I was Jesse Livermore from the bucket shops. I was the boy wonder. I couldn't be wrong. My ego, for the first time, was writing checks my account couldn't cash. So I held on. Hope, that most expensive of all liabilities, told me it was just a temporary shakeout. The stock sagged further. My paper loss mounted. Then the anger began to set in. The market was making a fool of me. It was not behaving as it should. I felt a personal affront, as if the ticker tape itself was mocking me. So I did what every amateur does when his back is against the wall. I doubled down. I bought more Union Pacific, averaging down my cost. This is the cardinal sin. You are not fixing a mistake, you are compounding it. You are telling the market, I am right and you are wrong, and the market will always have the last word. The stock continued to decline. My loss grew from uncomfortable to catastrophic. The numbers on the quotation board, your glowing monitor, became a blur of red. Now the true poison of revenge trading took hold. I was no longer thinking about general market conditions, or the line of least resistance, or the behavior of the stock itself. My entire world narrowed to a single burning thought. I must get my money back from Union Pacific. I sold out of my disastrous long position, taking a ruinous loss that wiped out a huge portion of my capital. But I did not stop. I did not walk away. I immediately flipped and went short, selling the stock in the belief that it would continue to fall. I was no longer trading the tape. I was trading my P&L. I was trying to punish the stock for what it had done to me. Of course, the moment I shorted, the stock found its bottom and began to rally. My short position immediately went against me. The market, in its infinite and impersonal wisdom, was teaching me a lesson I would never forget. Within a few hours of frantic, emotional, ego-driven trading, I had lost everything. I was broke. I had to go to my broker, hat in hand, and borrow a small stake just to get back in the game. It was the most humiliating and most valuable day of my early career. I sat there staring at the empty columns in my ledger and understood. The enemy that day was not Union Pacific. It was not the slow execution or the brokers in New York. The enemy was me. It was the part of me that could not accept being wrong, the part that demanded immediate satisfaction, the part that sought revenge. This impulse is the most dangerous state a trader can find himself in. It is a fever of the mind. Your judgment is gone. Your rules are forgotten. You are no longer speculating on probabilities. You are gambling on a desperate hope. You start to take trades you know are unsound. You increase your size, hoping one lucky shot will erase all the damage. You are not looking for A+ setups. You're just clicking buttons, throwing money at the screen, praying for relief from the emotional pain of the loss. This is the spiral from which few accounts ever recover. You believe you're fighting to get your money back, but what you are really doing is ensuring its permanent departure. The market does not care about your story. It doesn't know that you were up for the year, that this one loss puts you in the red, that you needed that money for something important. It is a great, emotionless engine of supply and demand. To get angry at the market is like getting angry at the weather. You can scream at the storm, but the rain will still fall. The only logical response is to seek shelter and wait for the storm to pass. For a trader, that shelter is cash. That waiting is the discipline to shut off the screen and walk away. This lesson doesn't just apply to fast-moving day trades. It can manifest in a slower, more insidious form. The stubborn refusal to exit a long-term position that has gone against you. Years later, I found myself in another battle, this time with cotton. A very well-regarded and successful cotton speculator, a man named Percy Thomas, gave me a tip. He was convinced cotton was going to have a monumental rise. His reasoning was sound, his conviction was absolute, and against my better judgment and what the tape was telling me, I allowed his certainty to override my own. I bought a huge line of cotton futures. Almost immediately, the market began to drift downward. It wasn't a violent plunge, but a slow, grinding decline that chewed away at my capital day after day. The tape was telling me, in no uncertain terms, that the line of least resistance was down. My own system screamed sell, but I did not sell. I held on, anchored by another man's opinion and my own pride. I had made my bet, and I was not going to be shaken out. Every small dip, I told myself, was the final washout before the great advance. I was, in a sense, revenge trading against the trend. I was trying to force the market to agree with my thesis. I kept in contact with Percy Thomas, who assured me that everything was fine, that the big buyers were simply waiting, and that I should buy more on the dips. And so I did. I kept adding to my losing position. My logic was gone. I was no longer an impartial reader of the tape. I was a man with a position, a man with a vested interest in being right. And so I could only see the evidence that supported my case. I ignored the overwhelming message of the price action. This is a subtle form of revenge, the revenge of the ego. You are so invested in your initial idea that you will fight the entire market to prove it correct. You are trying to get revenge on the price action for daring to contradict your intellect. The result was predictable. The slow grind continued until my losses became so monumental that I was facing ruin once again. I finally had to capitulate. I sold my entire line of cotton for a loss of millions. It was another fortune, built up over years of disciplined trading, gone in a matter of months because I could not admit I was wrong. I was angry at Percy Thomas, angry at the market, but most of all, I was angry at myself for abandoning my own rules. I had let hope and stubbornness take the place of observation and reaction. I had tried to tell the market what to do, and it had quietly, patiently, and systematically dismantled my account. After that cotton disaster, I went away. I left the city. I went fishing. I did not look at a ticker for weeks. I needed to clear my head of the noise, the emotion, the lingering bitterness of the loss. I needed to forget the money and remember the principles. This became my unbreakable method for dealing with a severe loss. You cannot heal in the same environment where you became sick. You cannot regain your judgment by staring at the same screen that reflects your failure. You must create a hard separation. You must disconnect. This brings us to the final, unchangeable law. When you suffer a loss that shakes your confidence, that triggers anger, that makes you feel the desperate urge to win it back, your trading day is over. It does not matter if it is 10 in the morning. It does not matter if you think you see the perfect opportunity. Your judgment is compromised. You are no longer fit for duty. The professional thing to do, the only thing to do, is to stand up, turn off the machine, and walk away. Here is the rule you must burn into your mind, the rule that will save you from ruin more times than any chart pattern or entry signal. First, you must define your emotional stop-loss before the market opens. This is not a percentage of your account, but a feeling. It is the point at which a loss ceases to be a business expense and becomes a personal wound. You must be brutally honest with yourself. When you feel that knot in your stomach, when you feel your pulse quicken with anger, when you hear that voice in your head screaming to double down, that is your signal. The moment you feel that, you are done. Not one more click. Second, the act of leaving must be physical. Do not just minimize the window. Do not just switch to checking the news. You must get up from your chair and leave the room. Go outside, take a walk, do something completely unrelated to the market. The physical act of removing yourself from the trading station breaks the psychological loop of revenge. You are putting a barrier of time and space between your wounded ego and your brokerage account. The longer you are away, the more the emotional fever will subside and the more your rational mind can reassert control. Third, the shutdown is for the entire day. There are no exceptions. The market will be there tomorrow. The opportunities will be there tomorrow. Your capital, however, will not be there if you give in to the madness of revenge trading today. By enforcing a mandatory cooling-off period, you guarantee that your next trading decision will be made with a clear head, free from the residue of yesterday's battle. You must treat your mind like a surgeon treats his hands. If it is unsteady, you do not perform surgery. Finally, when you return, you must trade smaller. Your confidence has been damaged. Your primary goal is not to make money. It is to regain your footing. Your first objective is to execute a few trades perfectly according to your plan, regardless of the outcome. A series of small, well-executed trades, even if some are small losses, does more to rebuild a trader's mind than one lucky, oversized win. You are re-establishing the habit of discipline. You are proving to yourself that you are in control, not your emotions. I have made and lost several fortunes in my life. Every time I lost, it was because I broke my own rules. And the rule I broke most often in my youth was the one that demanded I respect my own emotional state. I tried to fight when I was wounded. I tried to outsmart the market when I was angry. I paid for that arrogance again and again, until the lesson was finally learned. Your greatest enemy is not the short seller or the market maker. It is the emotional, hopeful, fearful, and vengeful human being staring back at you from the screen. Your first job is to conquer him. If you cannot, you have no business speculating in the market, for it will find that weakness and exploit it until you have nothing left. Do not try to get it back. Instead, walk away so you can live to trade another day. That is the only victory that matters, victory that